Hey, welcome, my fellow investors. This is me, ET, and remember, I'm not a financial advisor. I'm not your financial advisor. I'm just a self-taught investor who loves to look at ways to increase one's net worth. And one of the ways that I'm doing that is investing in equity, stocks. Yes, I am. And today is December 20th. And what a day in the market. The market was down, the Dow was down as much as 600 points. I believe it closed at 433 points, something like that. It's 430 some odd points down. I mean, this was a down day, okay? And a lot of people are panicking. Nothing really to panic about. I've heard some people ask whether or not we're getting ready to enter into a crash or possibly going through a correction. In my definition, today was just a drop in the market. We've seen worse days, but that I kept thinking about that, and I thought now is the time to do a video to explain what a correction is and what a crash is. So that way, once we know that, when we have days like this, we won't panic. We can do what the smart money is doing, taking advantage of it. So let's dive into what is a market correction and crash. December 20th wasn't a good day for the market. You know, a lot of people were talking correction and crash, but nah, it really wasn't. Not by the definition of a correction and crash. So let's talk about it. Let's talk about what is a market correction and crash. But before we do that, guys, I need you to do me a favor. Go make sure that you hit that like, subscribe, and notification button. Thanks a lot now. All right. This is what happened on the 20th. Dow plunges, NASDAQ nears correction because stock market investors don't see a Christmas cavalry coming to the rescue. Or, that Christmas cavalry that they're talking about is realistically, it's like the Santa Claus bounce, the Christmas bounce that they normally have in the month of December. Um, by the contrary, we've seen the exact opposite. On the 20th, the Dow went down as much as 600 points. I think it closed around 420, 430. It was down 420 or 430 when it closed up. All right, so let's take a look and see exactly what is a correction.
In investing, a correction is a decline of 10% or more in the price of a security, asset, or financial market from its recent peak. Corrections can be difficult to predict because they can last from days to months or even longer. But the average market correction is short-lived and lasts between 3 to 4 months. Many factors can trigger a correction, from a large-scale macroeconomic shift to problems in a company's management. During a correction, individual assets perform poorly. For long-term investors, a correction is only a small pothole on the road to retirement. The market will eventually recover, so they should not panic. But a dramatic correction can be disastrous for a short-term day trader and traders who are extremely leveraged. These trades could see significant losses. Investors and analysts use charting methods to track past corrections in an attempt to try and predict future corrections. Before a market correction, individual stocks may be strong or even overperforming. While damaging, a correction can be healthy and help adjust overvalued assets to create an ideal time to buy at discounted prices. To try and protect against corrections and potentially deal with declining prices, investors can set stop-loss orders or stop-limit orders. Of course, investors will still weigh the risks since assets might decline further as the correction continues.
So one thing that we've seen from that is that corrections could possibly mean it's a great time to buy, because they say normally once we get to the correction and we're 10% down from the overall high. Normally it turns around within 3 to 4 months. So could be great buying opportunities. This here is some of the common correction patterns. Uh, Many factors can possibly lead to a correction in overheated market. We know what's going on with the new variant for that CV-19 that's going on currently right now, and also the Build Back Better thing in Washington looks like that's going to be defeated, but yeah, I think they'll probably work out the kinks on that one there. But the bottom line is a correction. A market correction is a drop of less than 20%. Realistically, it's 10%. It starts at 10, no more than 20. Once you get into the 20% range, you're looking at a crash there. Normally, when we get to that crash level, now we definitely entered into a full-fledged bear market. Let's take a look real quick at some of the that trivia question concerning what is a bear market.
Somewhere in here I know, but I forgot. It's a bad one. Yeah. Thought it had something to do with more people like pulling out their money than investing it.
A bear market is when most of the stocks are turning down.
Everybody's buying. People are hesitant, they're timid. Short.
Or vice versa, maybe, I don't know.
You're speaking gibberish to me, but I think D. Woo! D.
Alright, see, yeah, I got 0 so far. Yeah, we're doing good.
So let's go ahead and take a look at the end of day chart for the 20th of December. Let's take a look at this here. Here we are here. The Dow closed at 34,932. If you look, this is a one-day chart. If you look at this trend line for the day. Definitely a downward sloping trend line there. And we see that, hey, it really got bad. And I believe at the lowest point, which is right around here, was down 600, but it closed down 433 points. That's 1%, 1.2% on the day, which is not good. Now, anytime you see this, you're going to have a lot of people panic and you're going to see a lot of the headline news and everything else. But the key thing I need you to tell everyone is this here. First of all, don't panic. And the second thing to do, something that I heard from and I agree 100% with from Larry Jones and Larry Jones Stock Up is when in doubt, zoom out. So let's zoom out a little bit because that 433 can be worrisome, but really don't. And the reason why is this here. First of all, we're not in correction territory. But when we zoom out, we get to see the bigger picture. We're not looking at a tree. We're looking now at the complete forest. Let's zoom out to year to date. Look at this. This is a year to date chart. Look at the trend line. It's going north. It's heading up. So that 1% decline in the scope of the year doesn't look too bad. Look at that. Even with that 1% decline on the 20th of December, we're still looking at 15.5% gain so far, thus far for the year. Look at the 52-week high, 36,565. Not only is that the 52-week high, but that is also the all-time high. Let's zoom out a little bit further and take a look at 5 years. Look at that. Trend line is still there. Look at this right here. We know what happened here. That's when CV-19 really showed its ugly head in the United States. And what happened? That was a crash. Because remember, that crash is more than 20%. But look, it turned around and recovered. Millionaires were made during this crash. That's the time when you make your money, is during a correction or a crash. All right. To prove my point, let's take a look at the history of 10% or more corrections and or crash. And let's take a look at something here. We're going to go all the way back to 1968. 68, I was, 6 years old. But look, from 68 to 70, decline 36%. Duration 543 days. Look at the 70s, 71, 74. Look at these days here. Then we get into the 80s, from 80 to 82, 27%, 622 days. Then we get into the 90s, 1990, we're looking at a 10%. 10%, remember, is a correction, all right? 28 days. All right, then they had another one, 19%, almost a crash that lasted 87 days. And let's go further, all right? 97, 99. Now look at this one here. 2000 to 2002. We know what happened in 2000. We had September 11th in 2001. Remember that. We had the dot-com bubble burst in 2000. So for 2000, 2001, that contributes to this overall decline of 49% that lasted 929 days. And we go here. The next one that we can all relate to was back in 2007, 2009. That was the crash of the housing market in the banking sector, 56%. Guys, I can tell you right now, I made a lot of money during this time period. That's when I started investing and started picking up some of the heavy hitters on the cheap. AIG, I picked up AIG, Citicorp, and Bank of America on the cheap. Bank of America was like $8-9 a share. Citicorp, I got it at about an average of about $14 a share. AIG, I think that was a little bit under $10 as well. So that's what that's what they mean by corrections and also crashes is a time really for you to make money. It's buying opportunities. And then let's just jump on down here to 2020. We know what happened last year in 2020. We had the CV19 take off. But look at this. It dropped 33%. So that means it was a crash. Look how long it took to turn around. 33 days. We crashed and that sucker started bouncing off of that. So whatever you do, know the history. Don't panic. Look at things like this as buying opportunities. So there you have it. Let's go over some of the takeaways. Number one, corrections and crashes are part of investing, especially in the equities market. You're going to have your ups, you're going to have your downs. Most important thing though is that anytime we enter into a huge drop like we had, or corrections, or even a crash, that is a buying opportunity. Do what the smart money does. They buy at that time. Whatever you do, if you're buying, you shouldn't be selling. Whatever you do, don't panic sell. That's the worst time to sell is during times like this when the market is down. Always remember what Larry Jones with Larry Jones Stock Up. Or Stock Up with Larry Jones. What he always says, when in doubt, zoom out. Take a look at the big picture. That'll probably calm your nerves. And the most important thing is that the market will always bounce back. 433 point drop in the Dow today. We'll get a bounce back from that. It'll bounce back from that, no doubt in my mind. Now, remember, on the 20th, today's day, the 20th of December, the Dow closed at 34,932. Remember, the all-time high for the Dow happened on the 8th of November of 2021, this year. It reached 36,432. That's where it closed. A correction based upon the high, a correction of 10% will put us down to 32,909. A crash is going to put us down to 29,252. We're not there. It was a drop. Take advantage of look at it as a buying opportunity. Take advantage of that. And like I said, chances are it's going to bounce back. With all that being said, guys, remember this. Save, invest, apply what you know, because knowledge by itself is not power. It's the application of knowledge is power. Guys, I'll see you in the next video. Take care. Bye-bye.